Hello, hello. There we go. Let me get the. What's up, Gabe? Can you hear me now? Can you hear me now? What's up, Charlie? I got to get this chat pop out set up. Boom. There we go. Let me get this together here. YouTube chat properties. There it is. A little louder. I can turn it up. How about that? I feel like it's kind of loud now. I'm just not talking into my mic that loud. All right. Well, we have a lot of ground to cover. So we're going to start not with jumping into charts right away, but doing something that I should have done, honestly, maybe a month ago. And this would be part of my usual prep. And, you know, I was late on it. I'm late in a lot of places. And, you know, if you're early in a market, you're going to make a lot of money. But if you're late, you're end up gonna you're gonna get like maybe a little bit of the leftovers at the end, but then you're gonna be left holding the trash. So, you want to be early to trends, and that's where like not early like before the trend is formed, trying to predict before there's any sort of confirmation, but just in general, like trying to see where the money is going. And there was a really interesting year-to-date chart for SPY, and I think that, man, why is it not letting me choose SPY as an index? Oh, oh, there it is. Haha. And you know, looking at these names, which is I think I retweeted it on Twitter. Looking at these names and then realizing that, you know, year to date in SPY, the top names are not technology. They're not. They're oil, energy, staples like Gap, Denny's, the Denny's chart, Viacom, which is like, you know, it's an old company that has really been beaten down really bad. But I mean, just that's insane right there. How have I not been really paying attention to that? That's sort of a mistake on my part. So I'm trying to, you know, get better at noticing this kind of stuff. And maybe like 3 months ago in November, November, there was, after Biden was elected, there was a huge explosion of solar stocks, which have sold off since then, since he was inaugurated. And energy stocks have been outperforming. But the fact that, you know, solar was going like up over 100, 200% from November through January, and marijuana stocks for that matter, like both of those. And I only caught it in January. So I basically didn't trade it at all November and December, but I traded it in January. So I was late. I caught the last third. You want to catch like the first and second third, and then by the last third be scaling out. So I think, you know, if I'm right, I think that we are in the last third of this sort of, what is half a year, quarter? We want to get the quarter. Here we go. We're like in the last third, but look at this. We have like 160% on the quarter for Viacom. That's insane. Anyway, So I'm gonna look through a little bit of, or like, I'm just gonna go through these charts really fast and see if there's anything that catches my eye. Some of them are really far overextended, but something like for, I mean, I know this company; it's a long-term company. Obviously, that one's not very liquid. I can't really trade that much, so not happy. Not happy with that one. Like something like L Brands, I can't trade that either because it's not liquid either. There's another screen that I do, like Goldman I can trade. And this thing has been up insane, like from 220 all the way to 350 now. I mean, I think if you look at my, I can turn to this chart really fast. If you look at my Goldman Sachs chart, I mean, it is broken every single, it paused here and I thought we were going to get, and we have this little downtrend in the RSI, which I've pointed out consistently. But if you look at like the all-time chart, I mean, Goldman has done nothing over, what is this? Oh, here we are. We're all-time. I mean, it only just broke out this month in March, February. This is its all-time chart. Like we had a little bit of a top here, 2007, then we had the crash. You know, sort of made a new high in 18, and then we had the tariff crash. Now we finally confirmed actually that higher high. It's actually a really fat cup and handle with a false breakdown on this all-time chart. So we have a really fat false breakdown right here, and then we have an actual breakout. So naturally, you're going to want to take the high and low range of this, which would be the blue fib, which I actually don't like the way that I constructed this. It has to be maybe a little bit darker so that you can actually see it, or lighter, I mean, sorry. Let's go like that. So, you know, the target is around that area right there, like 365, 370, 375. With these fibs, you can never be super, like, especially on this 10-year, 20-year time frame, you can't be very precise. But that's the general area that you're sort of playing for. And as you can tell from this yearly chart, like we are in the last, like you're capturing the last eighth of that move. Like it moved from 210. So we have this gap up, and whenever, like I have a scanner that will alert me for these breakouts on gap ups. And then we had another gap here, power gap, 2 gaps in a row. I don't have a scanner that scans for 2-3 gaps in a row, but it would be good to create one, to be honest, because this has right here 1, 2, 3, 4, 5 gaps, 6 gaps before it actually corrected once. So that's just an insanely strong chart that, to be honest, is not worth shorting right now. I got super lucky with this chart and was able to short it right here. Right on this candle, you know, maybe like a 15-point pullback. I caught like 5 points of that, but still not that easy to do in this chart. Like I could have been making so much more money long than short on this one. And I had a note on my Twitter to look for a dip buy at 275 with the target of 323, just based on my levels here. And we hit that. It made sense. I just didn't follow through with it. So that was a little bit unfortunate. So Goldman is leading the charge there. Let's go back to here. Twitter, another interesting one. This actually, it's interesting that it's up where it is. Performance year to date, yeah. Twitter is doing really well year to date. Ford, we got to look at Ford and GM in this session, as well as, yeah, Ford, GM. I don't really want to look at retail brands. It might be worth looking at some energy and some of these banks like Zion, RF, Wells Fargo. Also, like, you know, insurance, which has been doing really well, like CMA, insane. Like these are just names that I almost, WDC, names that I never talk about. But anyway, so we got the GS chart here. I think that, you know, we're gonna have resistance right here. Do you see like how the RSI is gonna bump up against this trend line? And actually trend lines on RSI work. So That will be interesting. It's probably going to be either Monday or Tuesday where we see this revert back to some sort of mean. And by a mean, I mean another trend line, which I haven't drawn yet. But, you know, this trend is very steep. I don't know if it can go on forever, but yeah, I don't know. It can't go on forever. And it would be interesting to try to catch it when it does reverse, but until we see a sector shift, that's not going to happen. Okay, so we got GS. Let's look at what was the other one that I mentioned? Oh, let's look at Ford, which also like breaking out here. We have a nice downtrend break, and you know, it's not a sexy stock. It's not a sexy stock, but at the same time, I mean, it's up over 50% from December area. Yeah. So, I mean, there is ways to make money on this, and I mean, this is a fat gap right here. Let me see if I can mark out a little bit more of a level here. I think we can start there and then go like that. Yeah. Mark it out like that. We'll use the blue for kicks. All right, so we have this 0.50 mark. I think I like where it is because of this little volume bar. It's a lot bigger. Right here, you can see this big volume area right in here. Downtrends, and we have a little bit more volume right here, which I can mark out with a rectangle. I think I'll put it like right in there. Yeah, right in there. So we're gonna mark that out. We'll make it a little bit grayish, actually. Oh, that's not gray. Let's make it gray. Interesting charts here. All right, so we're coming into this demand area right around the, you know, this between 13 and 15. But any sort of pullback to, I don't know, like 11 would be, especially this line right here, I would be very interested in, like that's a zone more or less, like between that 10 and 11 price. I would be very interested in seeing if I can play some swings. And it's, you know, GM is very similar where we had a nice flag breakout, very clean flag, like that, very clean. And I played it a little bit earlier in the year, I believe. But if you just look, like a little fake breakout there, but now we have a double 3-bar confirmation. This is actually a nice little confirmation candle to learn. You have like a green, red, green, red, green breakout. See it very often, even intraday. I love this pattern, compression pattern for a bull flag where you have double red hammer into moving average. That's what I look for as well on the daily chart. So if we can take this measured move here, we can maybe see a little bit of, I don't like the way that this fib is working though. Let's make it white. Let's make it a dashed line. Use one color. Yes, please. Okay. Values on the right, top. Okay, let's make it a dash. Levels line dashed. Thank you. Okay. Sorry about that. There we go. All right, so we have one measured move here. The second measured move, kind of interesting. We're kind of above it now because this is the first measured move to 50, 51. If we zoom back here, let's go to the 5-year chart. This thing has gone nowhere. Like, look at that. And we've only just broken out. I mean, we've had a 10-year consolidation and we're going to break out now. So, I mean, I think that this thing still has more in the tank, so to speak. Kind of funny because get it, it's General Motors, but I will be more actively watching General Motors upcoming because we can see, you know, 65 is, you know, on this flag break. We have a nice little confluence of fibs there based on these levels. We have a really nice volume base right here. Any sort of retest of, let's put it right there, 41 ish, like, 41 to 47. That's more longer term would be good. Sorry, Dom. This is just like, it's not sexy to be trading these names, but you can still make a lot of money on them. Okay, so that's that. 10-year base breakout. I mean, that's pretty significant. We also have this stupid chart, which I like. Guys, how have we not looked at that at all? Like, that's pretty ridiculous. That is a really insane chart. I don't think I've ever seen more in the tank. Yeah. I don't think I've seen this happen quite often. Like, look at that buying. Oh my goodness. Like, the last time I might have seen that happen was Baidu, where it was here. And we got a nice retrace into this volume area, more or less. So, I would wait for Viacom to come back into this 70 area. 70, 68, and then look for that. That's a long way down. I mean, basically it would be a retest of this. Maybe it's too obvious, Let's try to maybe look for something else really quick. We can see maybe this trend line here. I mean, that's about all I got. That's around 100. So that's possible. I mean, this is multi-pointed here. So we got about 100, and we got a nice little megaphone here. So, I mean, there's room down, definitely. And with the way that it's been pumped up, I mean, I wouldn't mind trying to short it at 100 just for a second. But that's an insane chart. I've never seen something quite as much like that. All right, we're going to look at BA next. Look at my chart that I've drawn out. All right, so I think the most, I don't know, my levels on my trading chart are definitely different than this one. I could change over really quick, but all right, so we have, I'm going to delete this actually because it's not useful anymore. We have a nice little break of this gap. I mean, that's a very strong break actually. And it was good that 250 was not rejected, because 250 is also like a psychological level, and it's the 0.50 retrace. So the fact that it wasn't rejected, like, I would say that this is my plan for BA. If we backtest 250 on weakness, like even if it's like rotational weakness, like where tech takes over for a little bit and BA tends to flag or rest, like, I might look to see if I can get in around 250 for a swing to 300. That would be a much bigger swing, but we have a little bit of a bear flag volume here, but overall, I think that we're safe up until 295. So 295, there's still room. There's still meat on the bone on BA. And we have earnings April 30th. Yeah, so I think time-wise, we're still okay. I would be targeting around 295 on BA, especially if it stays above 250. That's a really good chart, really clean levels to look out for. I didn't trade it as much despite having triggered a lot of my trades because I was focused on other things this week. But we're going to tweet that one out. BA, as long as it stays above 250, I think we will see 297 this month. Other targets lower are 280, which I think I marked out, and 265. The 280 and 265 levels are on my trading chart, which have a lot more lines on it. Anyway, okay, so BA. All right, now we're gonna look at some more Disney. which had, it didn't perform that well this week, but we have 1, 2, 3, 4 inside days. I mean, that's what I'm worried about here is if you see you have a fib right here, I'm worried about it a little bit rolling over because it can't break 200 and rolling over and potentially like, I mean, I don't know where it would fill down to. Maybe like retest this trend line again here. That would make a lot of sense. So around like 185-ish. That's what I'm looking at. I mean, like if it breaks 200, maybe 202, then I can look higher to 215. That's sort of what I'm looking for. But right now we have inside days and also maybe not the best candles for inside days, because on inside days, what I want to see are lower hammer candles. So the handle of the hammer is on the lower end, sort of like this, like that one. But if it's on the higher end, I don't like it because it means that there's some sort of rejection happening. So okay, let's look back here. We can just do some sort of history lesson on Disney. We have a higher hammer here. It was a little bit of a reject. We have a lower hammer, but then we have like 1, 2, 3 higher hammer, and then we gap down. So that's the danger of having these higher hammers is a gap down. Higher hammer, red day. I mean, like the price action is not conducive when you have a higher hammer, because what a higher hammer signifies is that the buyers tried to take it up, but then they smacked it back down. So I would rather have the sellers capitulate at a low and then push it up. That's what I look for, those lower hammers. Okay, so Disney, I don't really see a setup here. Let's go to JPM. JPM has been strong, but also the price action sucks. Like I can't trade it. So, I mean, let's see, the target is up there at 180. I don't really know what to say about this chart other than the fact that we have a breakout, obviously, on a gap up, which should have been a signal to me to buy it. I think that's like an obvious signal. Maybe a little bit too obvious. I didn't take it. But also the price action on JPM is not as good as Goldman Sachs for trading. So I would rather trade the action leader. Wells Fargo, this one has been beaten down over and over again, and it's probably the suckiest one of the lot. But I think we can still, I don't know why I don't have my fib set out here. All right, so we consolidated around this 0.50 retrace, and now we're probably going to get to 41, which makes a lot of sense because that's where this volume is, 41.75. Higher target being this volume here, 43.50, and then 47.50. On a downturn, we would be looking at breaking the lows around 36 and then 34.50. But again, like I would much rather trade Goldman Sachs than trade Wells Fargo. All right, let's go back to FinViz and see if we can see anything interesting on here. I will. This is. Let me actually reset this, and then pull up a screener that I use to price over 15. Where's over? That I use to find new names. It's how I found Grog. Why is there no over? Oh, there it is. It's how I found Grog. It's how I found Very and a few other ones. IPO date, I don't care about those. Technical, we're going to do gap up 2%. We're going to find the price above 20 SMA, price above 200 SMA. We're going to have, let's see what else is here. We want it green on the year to date up. And we're going to find volatility, performance, fundamental, technical. I think that should be good. Okay, so we got GME. That's great. So this is like a momentum indicator. It's very like this one right here. Like Funko, never, I mean, like I know what Funkos are because I've been like I've been hearing a lot about it actually in the real world, so it might be worth looking at. You never know. The chart is really, I mean, it's not really interesting to me. I don't like seeing these fat gap downs no matter like, I mean, like maybe if it was below it and I could focus on a fill, but all right, so we got LC here, another interesting one. Energy. All right, well, we'll come back to that. Let's just focus on the charts that we can right now. And we'll come back to the screener. The screener is actually really good when the market's in an uptrend. You can see which ones are pushing. Let's go to Tesla here. Oh man, Tesla kind of like gives me, like I made, a good amount of money on Tesla this last week actually, trading this little bounce. It was very, like, this was, I think, the best day in Tesla's history. 20%, or like second best day, I guess. And so, but we all know that the biggest bounces come in downtrends. So like this bounce right here, 625 to 713. I mean, that's another 90-point bounce all the way to 745. So that's like, 115, 20-point bounce. Here we had a bounce from 560 to 720. So we're still, in a lower low area, which for me is a little bit of a warning. We had historically under, look at that. So every time the RSI has gotten below this purple area, we have had a huge bounce. You can't see that there, but this is only the fourth time since September that this has happened. So we were going to have a bounce. I was able to play it. But now, what I'm looking for is we need to hold above basically 660, like this line right here, like this area. You see that candle right there? That's the sort of line that I want to hold the line in the sand that I want to hold. So it would be as easy as saying like, let's hold the low of Friday. That's a very good rule in general. If you're bullish, is if a stock stays above the low of Friday, then you can consistently trade long. But once it breaks below the low, you're starting a new weekly candle, you have to worry about a little bit of a flush. So that mark is 66. I could put it at 666 if I wanted to. It's close enough, whatever. We have moving average resistance above. We have supply gap resistance above. So as long as it stays over 667, I will attempt a long, but this moving average stuff is really difficult. I would much rather, play along over Wednesday's high, which was 720, I believe. Yep, right here on the chart, 720. So in between 666 and 720, I'm not touching it. Below, I will look for potentially a short to 620. Above, we can look for 760. That's basically the plan there. And you get that all of that information just from staring at the candlesticks. Very nice. I got to put this on Twitter really fast, and I got to figure out if I have to add it to a previous tweet that I did last week when we covered it. So last week I said, let's see, it was March 676 is pivot to demand zone above. Huh. Okay, so we're holding 667, which is the new demand zone. Okay. Tesla, nice oversold bounce this week. Caught a lot of it. Now we are looking for a hold of Friday's low at 667 with a trigger of 720 to hit 760. Below Fry low, we can short to 620. So it's a nice little like either this or that play. And I like keeping those options open, especially when the market is as choppy as it is. All right. We got any requests in the chat? All right, we got NIO, Fubo. I hate charting Fubo, but I'll do it for you, A. We'll go NIO first. NIO, really, really oversold bounce pretty much. And it looks very similar to Tesla. I mean, we have like these moving average resistance. Unfortunately, my chart is a little bit dirty because of the way that my levels are set up here. So let me change that really quick. I like having dashed lines instead of regular lines. There we go. It's a little bit better. And let's make this lighter. There we go. Okay, so you can see the actual candlesticks. We had a very severe downtrend. 1, 2, 3, 4, 5, 6, maybe about 16 red days. Oh yeah, duh. Charlie should have done the indices first. I was looking at these relative strength names first. I'll do that right after this one. All right, so it looks to me, just from the look of this chart, that we have this line. I don't know if you can see it, but it looks like the price is sort of attracted to this line. I can see it in my drawed out right here, like right there. It's always like sort of reverting back to, if you use this price action as a mean, this would be the mean right here, around 46. So I would say best case scenario is we base at 46 and move sideways here, like for this week, maybe like down here actually, and then we would move up into potentially 50. But I have a feeling that we're gonna pull back a little bit more. But again, we can use Friday and Thursday low to 43, 43 low as our stops if we're looking long, and then we can use, once we have a little bit of a flush, we can use 30, like the 200 EMA again as our risk, or maybe this line, 38. Yeah, 38. I like that better. If we're gonna look for a bounce play, I would look around 38, and you see like we have that, and then this area. So like right around there is what I'm looking at. So if we get a pullback into 38, might be able to look long, but again, playing this tech weakness sucks. I might tweet that one out too, actually. I think that's worth tweeting. We have the moving average resistance above, which is tough, but if we can push above that, we will hit 50. We will hit 50. If we pull back, I think 38 is a good buy spot. Above Friday high, we can see 50. Boom. Okay, let's look at QQQ. Well, we bounced where we were supposed to. I mean, oh, my chart just moved. That was kind of weird. We bounced where we were supposed to, which is around the September high area, December low. Makes a lot of sense, actually. And we'll have another little line right there. Boom. So that's sort of what I was anticipating to happen. That's why I was looking for a bounce. If you remember my live stream last week, I said, hey, let's look for a bounce on Monday or Tuesday. Now the bounce came really sort of, the price action was not that great. It was, the bounce came on Monday and then we sold it all off. And then we had a really big gap up that took out basically Monday's high. And that's really tough to trade. I mean, when everything gaps up like 4, 5, 6%, really hard to chase when you're in this downtrend, but that's exactly what happened. So now I'm going to look for us to, my risk level on QQQ long is 311.50. And I can say that off the top of my head. Lower high with an inside day. That's true. There is no inside day though. I mean, this is lower than that day. Unless you're talking about this day. But we're past that now. I'm still looking for it to hold 311.50, and I actually can say that off the top of my head because during the week trading it seemed like 311.50 was the price to watch. And if you watch here, actually 311.50, 311ish was the price that held on these days before we flushed underneath. So if we get you know, if we get some buying on the Qs, we can use that as another, you know, risk spot. But again, like we have a nice little, can we make this bigger? Please? There we go. Potential here. Let me see if I can copy and paste. Yep, there it is. Boom. All right, so you kind of really want it to hold that 311 area. Below 311, like this thing is going to get really choppy. The weekly chart, it is an inside week, but we have nice lower hammers. And we closed above the 21 EMA. So I mean, we had 3 days down, and then we had a relief, or 3 weeks down, and then a relief week. So it is true that it's not resumed in its uptrend yet, but the possibility there, we have some danger. Like we know when a flush would be coming based on this chart. We know that if it breaks below 311, we should be careful of our risk. And especially if it breaks below 303, like this open here, 305, it was between 303 and 305, then I really would not be looking long on anything Q related until we reclaim that 311 level. So just keep in mind in your head this week, 311, that's what I will be watching and calling out on Twitter. And then we have like this area right there. So if you think of that as a box, this box right here is something that I don't really want to be trading in between. Don't trade within the box, trade outside of the box. Because this box is like, it's like a what's the word? It's a sinkhole. Is that it's like you can get just totally congested, sort of like this. What happened in December? Like you can end up really getting chopped out if you're trading in this box here. So if we're trading in that box, I'm not really interested in the Qs. I'm okay shorting or longing it, but not getting chopped out. We are not in the uptrend yet, though, and we did not confirm higher volume on the Qs, which is also significant. So yeah, SPY is a different story. I mean, SPY is just, it's at all-time highs. So I think, you know, there's still like some targets up here. 413. Sorry, my chart is kind of messy, but the SPY chart itself is like not that clean. I would be targeting 400 this week for sure on SPY. I don't see why we wouldn't. We do have a little bit of decreasing volume. Definitely, like it's not very convincing. It's very choppy, and you have a lot of buying intraday when you have these nice little bodies on the candle. But I mean, there's not a lot of that happening. So, and a lot of these moves up are on gaps, and I don't really like if the moves up are on gaps, then it's really hard to trade intraday. You're better off just buying it long overnight and then cashing out in the morning, which has been the winning strategy for the last 20 years on SPY. Okay, let's look at Fubo. Anyway, the moral of the SPY story was let's look for 400 this week with the same sort of whatever price action that we've had this last week, until we see a little bit of reversal in the Qs. All right, so Fubo, it's still stuck in its downtrend here. I'm not really interested in it until it breaks its downtrend. That's pretty much, it's the same story, I would say. It's the same story for Fubo that I gave last week. Actually, let me tweet out this QQQ chart really fast because I think it's a very good one. And it gives a lot of information to people. That is good for reference later on. So when we hold 311.50, 311, I'll look long. Support below is 305 and 303. Okay, that's that. So, I mean, it could very well be the case that we gap down below 311. So then everything I say about keys then will be irrelevant until we reclaim it and also close the daily above it. People forget about that. People forget that you can reclaim 311 intraday and then reject it into the close, and that creates another one of these wicks, which is not nice for people who are swinging long because it leads to potential gap downs. I don't really have a lot of big thoughts on the 10-year rates. I'm not an economist, and I don't want to sound like I know more than I do. All I know is that at one point the market cared that they were going up, and now they've seemed to stabilize a little bit. So all I know is how the price is sort of reacting to it. Yeah, that's the long and short of it. Okay, let's look at Visa. Nice little extendo handle here, breakout. I see continuation in Visa's future. So this is a really tough one to trade intraday, and you can see that there's a lot of wicks. I mean, like this one got up to 226 and then it went down to 220. So you're going to have to weather some of the storm there. But overall, I mean, this is a breakout. And I think, you know, you kind of want to be in this unless it breaks below 216 again. You can even set your stop a little bit higher, actually. I would probably set my own stop a little bit higher. Right around there, which is around, let's see, yeah, these double candles here, 220. Easy stop, 220. You have basically a 4-point risk, and what else is there? I don't know. The reward on this is phenomenal. It's like 4 to 40. So I probably will enter some swings on this with the intention of playing the breakout. Now, if we get, you know, a false breakout, you know, you're risking 4 points of risk. So it's not that bad. Overall, not that bad. I'm going to tweet this one out too, because I kind of like it. Will Prob enter swings Monday with risk of 220 and target of somewhere in the area of 250. So that is my plan there. Okay, we can also, I mean, MasterCard's pretty much the same deal. Maybe MasterCard's a little bit stronger than Visa, but I'm not exactly, I've traded Visa more than MasterCard. I mean, the risk to reward is good there too. So if you want to do both, you can. 4 points of risk. That's a good question. I will answer that. What I mean is that if I enter this trade, let's say, well, I'm not in it, so it really matters where it opens on Monday. But let's just say it opens at 225. Then my stop, which means that if the price goes below 220, then I will be out of the trade and my idea will have been invalidated. You want to know when you're wrong. And I know always when I'm wrong, so that I can get out. If I'm out of it, then it's helpful. You know, the more that I look at this chart, though, you don't want to put your stop too tight. So I actually would put it below this candle here, which is around 219. So it's not 220, it's 219. So my risk is extended to 5 points instead of 4. But if I enter at 224, then I have 5 points that I have to weather. So like as long as the price stays above 219, I will stick in the trade. I will have to suffer the consequences if it goes down to 220 and I get stopped out. But the risk to reward ratio is really high. So like I am risking 5 points. So 224 to 219 is 5. And then my target, my target is like 240, you know, ultimately my target is a lot higher, but I just like setting a little bit lower target to take profit. That is 16 to 4, 16 to 5. It's about 3 to 1. So that's a good, like, that's where I try to keep my risk to reward ratio around. My stop would be around 219. My target around 240. That's 3-1. It's really good. If you can get 3-1 on all your trades, you're doing a really good job. Okay, let's go to some other. If you have a question, you can keep asking. Let's go to some other names. Let's go to some. Oops, that is not. Let's go to SMH, which honestly, it's a really sad chart. To be honest, I mean, like this thing has been a beast since 2011 or whatever. I mean, look at that chart, and now it's underperforming. And SMH is a really, really strong or like staple part of the technology market. So I'm not really interested in it, especially below this area. I mean, that area, it was rejected once already, so that's okay. Like, it was rejected once. Better for us to observe at that point. But in the SMH, which is semiconductor component, you have NVIDIA, AMD, Intel, and Micron, which also was strong, but now we got to look at that one too. So Micron has been the strongest one of the bunch. We also have, like, by extension, AVGO, maybe even Microsoft, and Apple. So, I mean, like, they're not part of SMH, but they are adjacently, like, the price action is very correlated. So I'm not interested in SMH here at all. I hate this 3-bar down here is really, really, we have a basically, in my eyes, this is a 3-bar down and a bear flag. That's pretty much what it looks like to me. No lines needed. And that's kind of worrying because, so I can like knock out a bunch of names that I would potentially consider. It could potentially be a Head and Shoulders. It just looks like a bear flag to me, like a lot on more simpler terms with the price action. But let's see. I mean, it can get all the way up to 243, and I would still say that we're in a downtrend for sure. I mean, the definition of downtrend is lower high. We have a little bit of a lower high, but I still think we could maybe get up to 243, fake a lot of people out, and then keep going lower. But as it is right now, we're below this 50 moving average, which, you know, if you're below a 50 moving average, you don't want to be putting on a lot of swing long risk unless you're playing another level like the 200 moving average. Then you can like play a little bit of a bounce. But below this, like, I'm not really interested. So I can take out, by extension, like NVIDIA. We had a bounce in demand, and we had a little bit of an oversold bounce, but ultimately, I'm not really happy with where it's at. It's a nice back test, I'll give it that, of this demand area. So 500. If it gets below 500, might short it, to be honest. But AMD... yeah, oversold bounce. Right now it's holding the 200, but, you know, it's not a nice chart. Not a nice looking chart. That is a weird line that I drew, to be honest. Oh, it's this. Okay, that makes more sense. I mean, the fear on AMD, which don't quote me, but just looking at it, it could happen, is that we break through 70, 72, 73, 71 area, and we fill this 65, 60 area. That would be brutal. That would be brutal for a lot of people. I actually, I'm going to set alerts on my computer to mark out if that happens. Because what we could do here is we can backtest this trend line, 82, and then completely roll over. Don't discount that possibility. So below 73.40, you have a very easy trade. Like probably one of the easiest trades you'll ever make, because you have a 1, 2, 3, 4 points. If it tests down there again, you can really, really catch a nice flush, maybe even a really fat one down to like 68 area. And your only risk is that 73.50 level. So that's the best trade I see on this chart. And got to stay objective about it. All right, I'm gonna put that out there on my Twitter to mark it for posterity's sake. Okay, AMD chart doesn't look that's great. Still holding downtrend line in a weak sector. If we test 73.50, 73.50 again, we can take a short trade for a potential flush and more gap fill. All right, that's a cool chart that we found. I haven't traded AMD in a minute, so okay, let's go to DraftKings because we got to get in this sports betting arena, which has also been nice and strong. All right, so let's see. Higher highs, not easy though. I mean, not an easy chart to trade. I mean, we have overall, I mean, like, okay, so we have this move up correction, this move up correction, and then we have this last move up. Not last, I mean, it's the third move up, but within this move, we've had 1, 2, 3, basically 4 consolidation / downtrend days, which is really tough. 5 even, this one right here. Wow, there's just like so many shakeouts in this chart. It's pretty incredible. I'm going to say that, man, this is a tough one because DraftKings, it's actually really difficult to trade. I think I can catch it when it moves. Like it has these days where it just goes, and those are awesome days, and where it just like completely collapses. I don't know, to be honest. We hit my target. So my target was 72.50 and we hit it. So I'm not sure what will happen here. We might have to base below that. And if we close the daily above it, then I will look to swing long. But as it is, we hit my target, lots of profit taking potential and potentially. So that's what I'm seeing there. Yeah, we can do Apple too. It's pretty much more the same. You're gonna see a lot of not fun price action. Let me put out this DraftKings tweet. I'm pretty sure I called out that 72.50 target like a long time ago. Yeah, well, let's just put it here. Okay, let's look at Apple. We're about an hour into this now. And we've covered the financials, Boeing. Yeah, this price action sucks. I mean, I don't know how you can trade this, to be honest, at all. I don't know. I mean, like we're creating this like little, I don't know, you can't see it here without me. Like the price is very much attracted to this 118 level, very much. But I don't, there's no trade here. I mean, to be honest, there's nothing that I see here that is worth tweeting about because of how sad the price action is. I mean, we've had a bear flag here. And this potentially could have been a bear flag, but we had a little bit of a hammer, green hammer here. So there's just like a lot of mixed signals, to be honest. It needs to really get over, I would say 130, 129, 130 for me to start looking long, because then we can make a higher high. That would be nice. We have a gap fill, but I don't know. I'm looking for 130. Then I'll start to think about trading it again. I would much rather trade it short, to be honest, because it's the least anticipated move. We still haven't touched the 200 moving average, and we also haven't filled this gap yet, which I thought would be filled back in September, and what never was. So yeah, that's what I think of Apple. We'll go to Penn next because that's part of the sports betting complex. And we should also look at Win and LVS. Penn, I think it looks a lot cleaner than DraftKings. I mean, this is a much cleaner uptrend here than the DraftKings. Also, it was added to the S&P 500. So that'll be a really interesting trade if we can catch some of the price action on it. I think, I think it was gapping up. Let me check on my Thinkorswim. Sorry, I know it's not on the stream. Yeah, it gapped up to 140. So we have another gap. That's 1, 2, 3 gaps. All right, so I think my target would be a 150 easy target on that. So if we hold 140, we can get 150. That's pretty much the either or. I also wouldn't mind seeing a little bit of a sell-off in the morning so that I could get in on a V. That would be fun. All right, so Penn is a good candidate for this week. That was a good suggestion. Also, we have a little bit of a breakout here. I don't know if you guys can see that. You can see a little bit of the boom, just like that. Really simple. Rejected here once, confirmed, maybe a little bit of a back test. All right, so let me extend this up a little bit. There we go. Any more suggestions or charts you want me to look at? I have more in the back or in my watch list that I want to go through as well. Some IPOs to look at. Not Roblox. Can't really chart that. Sorry. Penn gap up Friday afternoon on SP Edition news. If we hold 140, should see 150. Would also even dip by in the morning. Nice breakout in uptrend. One of the few names where you can see an actual breakout in an uptrend. All right, let's go to, let me just close some of these windows. Let's just like scroll through some IPOs and I'll see if I see anything interesting. Palantir, okay, it's above 21 and 50 with a little bit of a bullish engulfer too, but the volume is not really confirming. Still in this chop area. I'm not sure about it in this chop area. No longer momentum trade. So tough. Airbnb, that actually looks pretty good. I say it looks pretty good because we have double lower hammers on the 21 moving average, and we could get a range break. Range breaks are fun to trade. They're awesome. So if we get a range break, we need to see what our target would be. Looks like it would be around 250, somewhere around there. That would be fun if we got that. PLTR, yeah. All right, the other one that was tough to trade, man, was Dash. Dash, I don't really know. I don't know what's going on PLTR. I think that's a really good idea, actually, with the chart, the way that it's looking. I really think that's a good idea. He said he's selling covered calls. Look, if you're selling, I don't know what you're selling right now. Maybe like the 30s. Probably a good bet. Just I think one of the underrated plays is probably to buy, like leap options and then sell closer dated options, sort of like a calendar spread. And if you're doing that with shares too, then more power to you. So that's if you believe in the company, then it's a good strategy to accumulate more money. Okay, let's look at apps. We should also look at SKLZ. Sorry that I can delete this line. I gotta find more lines to delete. Let's delete this one. Nice. Okay. This is kind of a weird chart. I'm not even sure what's happening with my chart here. I mean, I think that line made sense actually. Maybe I should re-add it. But I think it makes more sense there because we have 1, 2, 3, 4, 5. Yeah, that makes a lot more sense. Okay. .98 premium. That's not too bad. I would probably prefer to get more money on it, but if you're worried about it moving up. Let's see. All right, so apps. You want to look at DDD? Okay, we can look at that one too. We should also look at the ARK funds, but a little bit harder to chart those. Apps is... Oh man, this is a tough one. I would say we can buy it if it tests this trend line again, but right where it is, like I don't think I would touch it. We have 1, 2, potential 3 rejects here, so I wouldn't touch it there. I don't think I've charted. Oh, I did chart out DDD. Yeah, this is a tough chart. Tough chart because we have like basically that right there. Honestly, if it got back to 36, I might short it. That would be interesting. It's in a downtrend. I mean, we have a lot of room down. Because you see 1, 2, 3, 4, 5, 6, 7 wicks, which is confirming that this area is extremely important on DDD. So it's between 33 and 36. That area is important. So I expect at the very least, an initial rejection there. Very least. CLDR. Wow, that one really took a turn for the worse. CLDR is in the same category as net, I think. Yeah. They do like cloud-based services. We should look at that as well. That is a sad chart. Actually, it might not. 1044. If we backtest this, pick up some 20 calls, see if we ever get a turn. But I wonder what. I don't like the earnings gap, actually. That's probably a bad play. I wonder what happened at the earnings. Probably not the best play. Never mind, ignore that. Crowd. It's still one of the stronger names, I think. Holding up above its initial gap here in the demand. We just can't trade it until we see a sector rotation. It's really difficult. I'm guessing it's the same thing with net. Yeah, I mean, like net as well. Like it's holding this demand level really nicely. That like we were like on the edge of a really good thing on Thursday and Friday. We couldn't follow through though. So net, crowd, SE. Now this is an interesting one because if you see, we've actually backtested this breakout area twice now. And I actually, this might be a play to try to get it back up to 250. I like the lower hammer confirmation. Yeah, it's interesting. I would expect some type of bounce very similar to this one. But maybe like, I don't know, 260 area. That would be cool. All right, we're going to put that on our potential long list that I'm making. TDOC was my baby early on. Now I don't know what it is. It's a monster. TDOC, look at this megaphone pattern. I mean, if we see any type of turn, I don't know. Like I might at this point stack up on some leaps. It's so tough because I like the company, but we're in this weird place. I need to erase these inverted head and shoulders look, because it did work, but now they're irrelevant. So just like really, let's just put this like right there, like that. Put it like that. Rising wedge. I don't see it. On T-Doc? Like, you mean up here? Oh, you mean here? Like here in this area? Yeah, I mean, it's below the 200 EMA, and it's hasn't even been able to recover it. So it's like, it's not strong right now. But at the same time, like, it's held, like, this is a very important level for it. Below 166, oh man, like, it's so tough because there's so many levels, but obviously 140, below 150, you don't want to touch it. But if it like flushes to 150, it might be an interesting bounce spot. But I don't know. I'm just trading counter trend at that point. So this is just my thought process right now. It's below the 200 EMA. I don't like it, except for the fact that I have this megaphone pattern that potentially could play out, and we could get a nice bounce up to 220. It is a little bit of a bear flag right now, though, so that's what I'm worried about. I don't have much more thoughts other than that on that one. CLSK. If this is a penny stock, I'm not going to do it. It's not a penny stock. I've never. Oh, this is like plug or blink, huh? Wow, what a chart. Well, I mean, it's bull flagging. I can tell you that. I can tell you that it's bull flagging. Let's see. I wonder what happened here. It's like no volume on this one. Oops. Yeah, I don't know. I mean, like, if it breaks the bull flag, maybe around like let's see. We'll say 36, then probably 50 would come, I would guess, right? 48, 49. I would just target this demand area. That would be my play. If I was forced to make a play on this name. Okay, Grog. I still own my commons here. I added around 37. That was nice. I am not sure what the trade is at this point, though. Like, it's a little bit in a consolidation zone for me, just like a lot of QQQ. I would like to see it. You see these wicks here, right around 54, 53, 52, that area. I would look for option play above that, but where it is right now, it's prone to be rejected at 52, 53. How are our retail stocks doing? The ones that, okay, so cost bounced into demand at our line here. Nice follow through too. That was a big volume day right there, if you noticed. I didn't do any of those. I will do. That's a good suggestion too. That was a nice bounce. I think Walmart also bounced on my line. Yep, hit the demand. All right, so we're probably going to see a little bit of profit taking. Target, same deal. All right, so all these names bounced at line into demand again, so or into supply. So maybe a little bit of profit taking there. That's a very easy sector to look at. Okay, let's look at TLT, which is looking terrible. Yeah, I don't know. I mean, look, if it breaks down below 134, like, geez. Let's see. Let me draw some lines here. I think that's definitely. Well, that's tough because it's like, this chart looks kind of funky to me. It's a little bit the levels are not precise, which makes sense because it's an ETF, or like it's a bond ETF. Draw it there. I think so. So this is like a really fat breakdown, and it doesn't look like it's slowing down. It's really tough. You can't trade it intraday. It has to be a swing play. I like this. This has the danger of probably breaking down below 134. I would say to 130. Bonds have not been doing well at all. So I would say probably a breakdown to 130 is possible. Definitely. It doesn't look good though. Not at all. Gold. Also, same deal with gold. I mean, like this chart, I didn't like it at 170 when it broke below. I just hiccuped. I didn't like it when it broke below the 200 EMA, and we went around like 13 points lower. And now it looks like a little bit of a bear flag, but I wonder if we have any significant levels here. Maybe this one right there, 150. That would make a lot of sense. We also got this one right here, which is where it stopped at. Yeah, so okay, so basically below 156 would be 150. That's pretty much the play there. But I don't, below the 200 EMA, it's never fun. Never fun. Also, you like my red line here? Yeah, so it's possible we could backtest this trend line and then continue lower. I'm pretty sure SLV will be. Oh, SLV has some nice strength compared to gold. That's kind of interesting. I don't really need to chart it, but you can just tell by going back and forth that it's not breaking down like gold is. So there's some strength there. Riot, wow. Probably would be, I mean, like Bitcoin, it actually is really close. 64,000. What's above that? 74,000. I think we could see some big moves in Bitcoin again. I'm thinking we might see some moves. So I would be targeting definitely 75 in Riot, especially if it holds above this. Right in there. That's nice. That's easy. Like easy demand area. I like the easiness of that target. So Riot long. I mean, I'm taking notes here. Maybe Mara, but I would rather trade Riot, I think, than Mara because of the way that Bitcoin will probably lead. SOS, another play we might be able to take long as long as it holds above 585. It's a nice risk to reward, I think. We have a little bit of rejection, obviously, once, but Friday's low holds, we can take it long, I think, as well. What else? Oh, let's look at some of the. Wow, this chart just sucks. Wow. Well, looks like we're bear flagging. That's my first impression. 350, 360. So I would definitely be looking not long on this one. That doesn't look fun. At least right now. P10, it's above 200, but also so there's some names where they're above demand and some names where they basically bounce into supply. So that makes me think that there's going to be chop this week. That's sort of what I would expect to happen. We can look at some of the open. One of the stronger bounces. I actually think that this is a good. I own this one. I own it from basically here, 25. So I was down on it when we recovered. I didn't add. I just kept it where it was. But 25 is where I own that. Oops. bounce into trend line, probably will reject here, maybe test and fill this gap around 65. So that's sort of like what I would see right there. So reject 65. Okay, I didn't cover Chinese names yet. Let's go through some of them. Baba, I think it looks bad still. Yep. Man, I mean, it's like right on the edge of falling into the abyss. So that is like a really... So the abyss, let's see where the abyss would take us. The abyss would take us, I think, down to 208. That would be epic fall. But even more epic would be the one that, like, if it would be the way that this supply zone would put a cap on its growth moving forward. So, and you really, really, really want it to hold here and test up into that 250 area. I think I said that last week as well. Like, you really just want to get up into this 250 area to see if we can break that downtrend, this white line downtrend. Baidu looks healthier for sure. It's going to consolidate between these two boxes, very similar to what AMD did when it broke out. So that's what I would expect for Baidu. I covered DDD. MSTR, yeah, it's just really expensive, so I don't really trade it that much. Oh, let's look at PayPal and SQ. Because PayPal and SQ, it's weird because they're in the sort of Bitcoin crypto world and they reacted to it early on, but now they just sort of sold off with tech as well. Oh man, see, this is just tough because we're in between these boxes and I just don't like trading in between boxes. Maybe SQ looks better actually. SQ looks better than PayPal. Yeah, I would much rather trade SQ instead of PayPal. I'm going to add that to my list too. So we got VSQ. What was the other one that I was naming? Oh, let's look at Roku really fast. Oops. Let's look at Roku. Roku, also between the lines. And by the lines, I mean this demand and supply zone. This supply zone, look, it's like very obvious where the buyers were supporting it. They were supporting it at 380, and now the price is below that. So every single one who bought at 380 is going to sell when it breaks even. So we got to wait till it breaks above that. Okay, we got a request for GoGo. Nope, I don't like that. Looks like it's probably going to test lower here, probably around $10. I don't like it. It's just I said it right away because I don't like these rejection candles. Usually these rejection candles bring follow through to the downside on it. And it looks like the volume would suggest around, like, I don't know, 1050. I mean, like, it just means that people are not willing to buy up on this breakout right now, at least for now. I think I'm scrolling through a lot of my names and I covered a lot of them. A lot of well, we can look at Tilray. The momentum's not there right now. GME, I might actually short GME this week. I might short it. Don't be surprised if I buy some GME puts. Just putting that out there. Below 300. Like, it has to be below 300. I think Joe is in puts. I kind of like it, man. I mean, like, look, it has all this room down here all the way to 136. I might, GME short might be the play that makes me money this week. So we'll see. AMRS, that's a nice chart. If it's healthcare though, I'm not interested in it. Wow, something happened there. Is it a healthcare chart? That looks like a healthcare chart to me. It's so tough. I mean, like whenever you have these like fat downtrends, like people always trying to. It's not healthcare. Reverse pharmaceuticals. It's a biotech company. Yeah, it's a biotech company. Not healthcare. I like pharmaceuticals, biotech, all that jazz. All these yeah, 2286. I mean, look, as long as it's below this, it's not interesting. Once it breaks above that, then you have a nice base. But these are all like sellers right here. Right here. You're going to get a lot of resistance right in there. That's my prediction. AMC, it still broke its downtrend. It's not dead yet. It's not dead yet. And, as long as it's still in this up, as long as it's broken its downtrend, there's potential here. I would say it has to get above 1250. Yeah, 1250. That was Thursday's high. But even better, 13, because this is a gap down that you want it to get above. So $13, maybe we'll get some momentum back into it. We didn't really go through all the big caps. I mean, they weren't worth going through for me. Yeah, not a fan of the chart, even though it bounced in demand. Got to wait for it to set up again. Definitely not a fan of that chart. That one, not really either. I mean, gosh, these charts suck. I mean, maybe, but there's still a ton of resistance right there. Not really. That one's not going anywhere until we break up here, 2130. So, I mean, just a quick review. It just doesn't look like anything's going to happen unless we get one fat big candle. So we just need a big green candle on all these names, and then we might be set up for something better. But I think that's going to do it for our charting session. In review, it looks like, Penn was the other one. It looks like we have, very few setups to see. To really profit, like to have a good idea of what we know we're gonna do when they trigger. We'll see if anything else sets up during the week. But Riot, Mara, SQV, GME, Penn. Maybe we'll try to look at Viacom in the middle of the week to catch up on it. GME. Tesla, we have a clear plan on Tesla. I like having clear plans. Everything else, Airbnb was another one that had a nice look to it. I'm gonna watch Airbnb. I don't think I looked at. Let's look at Upwork. Oh, I didn't spell that right. UPWK. Yeah, that might be a play, actually, Upwork. Maybe. I hate this being below the volume, though. SKLZ. Yeah, maybe, actually. It has some nice green volume bars. I could see a nice little push up into 35 here. But we have to get above, let's see, right there. No, a little bit higher. Right there. Above 33, 30, 32. Okay, LMND. I go really fast through these guys. LMND, that bounced where it was supposed to, but now it's bear flagging. So not what I'm interested in right now. Maybe I can go short on it. Okay, so that about covers it for what we're gonna do. Oh, MBA, obviously. All right, so we got BA, easy. BA, Riot, Mara, SQV, GME, Penn, Tesla, maybe, if the market gives it to us. And that looks like it. All right, y'all. Oh, we got Win and MGM. Yeah, I mean, those are like in the same sort of category. Wynn was consolidating all week, and the price action is getting kind of stale. I think stale is the right word I would use. This was nice. Now it's stale. I still, so we have like 1, 2, 3, 4 rejection bars here. You can see 1, 2, 3, 4. I don't know. I don't like that. I still think we can get 145, and we probably should. We might have to retest somewhere down in 130 first. So MGM, that looks a little bit better actually. Yeah, that one looks better. Nice little blue sky breakout happening with MGM. I think, didn't they announce, was that MGM or LVS that they announced that they were going to do some sort of online? My guess is based on the chart, it would be MGM, but could be wrong. Anyway, y'all, that's it for me. Thanks for joining. I hope you guys learned something. If you have more, oh wait, we gotta check really quickly to see if anyone commented on Facebook. Okay, so we got one request. It looks like maybe a couple. If this is no, can't really do DNN. I bet. Hey, it's bull flagging. Okay, I'll do a little bit. There you go. That's your DNN. It's not a bad look. I mean, sorry, that was a mistake. I mean, yeah, I would target 143. That's all I can say about that. But it looks like it could actually get there. So there's your reassurance. Twitter, in demand, choppy, Snap. Looks okay. The price action sucked last week though. So I want to see some follow through on that. And yeah. All right, y'all. Thanks for joining. Have a good one. Have a good Sunday. Enjoy the weekend before this week. And I'll talk to you soon. All right. Peace.